Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech live from Washington. Coming up, ARM announces plans to sell its own chips for the first time, with Meta as the first major customer.
Plus, space stocks on the move after reports that SpaceX aims to file a prospectus for an IPO as soon as this week.
And Kleiner Perkins makes its largest raise ever, $3.5 billion. We'll discuss next with partner Ilya Fushman.
But first, we check in on these public markets and what volatility we have experienced today. We're at 1.2%, let's call it, on the Nasdaq 100. Nvidia on the lead. We've got many of the real tech and growth names surging on hope that ceasefire talks can start between Iran and the United States, even though Iran pushes back on that Brent crude down 3.8%, Ed. We're still above $100, but this topic front and center at this year's Hidden Valley Forum. And Bloomberg senior tech editor Mike Shepard, I'm pleased to say, has the latest for us. Look, there seems to be caution necessary because Iran's saying, no thanks, we don't want your 15-point peace plan. We've actually got 5 of our own. But the market is still optimistic here.
Well, there is at least some sign of engagement, at least through intermediaries. The U.S. had sent its 15-point plan through Pakistan. It was promptly rejected, and it contained some of the familiar provisions, limits on Iran's missile program, a rollback of its nuclear efforts, and then also international guarantees for access through the Strait of Hormuz. And now we have seen Tehran respond with its own 5-point plan, or its conditions, if you will, that include actually a halt to hostilities, a demand for reparations from the devastating assault by the U.S. and Israel on its cities and critical facilities, but also, very important, sovereignty recognized internationally over the Strait of Hormuz. So that is emerging as a sticking point, and that's actually something we heard discussed during the proceedings yesterday at Hill and Valley during your interview with Palantir's chief technology officer. He brought up the importance of the Strait as an access for critical materials that are needed globally.
Right, but then that's why you see markets doing what they are, right? Technology stocks up, oil a little lower, even when those headlines from Iranian state TV hit, pushing back on the state of affairs with negotiations. Apart from an algo move, status quo resumed. Let's go to that conversation with Shom Sankar. We talked about where the conflict in Iraq sits in the history of war, frankly, and the role that technology has played. Listen to this.
The current operations are ongoing, but I think people will reflect back and say this is the first large-scale combat operation that was really driven, enhanced, made substantially more productive with technology, with AI.
The first AI-driven war. Palantir named a little higher today. What else do we take from that?
Palantir is really front and center in this question of AI's role in warfare because it is their Maven system that is being used as the mission control for a lot of the U.S. combat operations. And it has really accelerated, in the view of combat commanders, the way that they process enormous amounts of incoming information on the battlefield. And when you think back to prior conflicts in the region, the current one is so vastly different. And it's simply because of the enormous amounts of data that they now have coming in from satellites and other surveillance equipment scattered around the region that commanders have to assess, but they simply don't have the personnel all in one place at a time. They really do need that machine learning and artificial intelligence capability to be able to sort through all of that. I think another critical point that also came up in the conversation, not only with Shyam during your interview, but during his remarks in the panel yesterday, was just the need to accelerate U.S. procurement and make it more agile so that the U.S. government and its allies can develop for the battlefield more quickly these drones, for instance, the low-cost drones, but other technology that could be brought to bear very quickly against an adversary. And he looked back to World War II when there were more than 100 different airframes developed by industry, by the U.S. industrial base. Only a handful of them proved critical, but he made the point that, look, we have to be trying harder and really spreading a lot of this.
A path towards ending the war in Iran is what's pushing technology shares higher this morning. Bloomberg's Mike Shepard, thank you very much. From defense tech to space. Some stocks moving off on news around SpaceX's IPO, EchoStar, Rocket Lab, AST Space Mobile, many others all rallying as the information reports that SpaceX aims to file a prospectus for an IPO as soon as this week. That follows a previous Bloomberg report that SpaceX was planning to list this month or file the documents at the end of this month, which, by the way, if you look at your calendar, is fast approaching. Let's get out to Bloomberg's Kyle Porter. We've been over this. This is likely to be the biggest IPO of all time, either on a dollar raised perspective or on a valuation perspective. Let's talk about the latest, Kyle.
Indeed. The more recent reporting suggests that they are on target for a June IPO, which, as you correctly point out, would be the largest IPO by both valuation and by amount of capital raised. The current record was held by Saudi Arabia's Aramco. They raised around $29 billion. This would be, according to recent reports, at least double that. So you've got to look at a huge range of institutional and retail mix to get this sort of an IPO done.
And real demand at a time of real market volatility and big deals being done. Is that still all buttoned up? Of course, it was only recently that SpaceX consumed XAI.
Indeed, it wasn't only very recently, and that's a business that has a huge cash burn attached to it, but it doesn't seem to have dented any enthusiasm for this IPO. You've really got a situation where institutions are looking at SpaceX as a monopoly, and the retail component are looking at it as, Master Elon strikes again. Of course, they're going to want to get into this. He's made spectacular returns for his investors over the past 20 years. We're
just showing a chart, Kyle, that is the kind of anticipated IPOs, and the valuation of SpaceX like $1.75 trillion. It's worth reminding the audience that post-merger SpaceX XAI, that private market transaction, valued the company, the combined entity, at $1.25 trillion. This is big. There's a lot at stake here, right? Like, there's a reason that all of these space and SpaceX adjacent stocks are pushing higher. This is one that the world wants to get in on, and there are a long list of creme de la creme investors that are already on the cap table. Just go over the basics of what we know of the existing backing that SpaceX has.
I mean, the existing backing includes people, blue chip funds like the likes of Fidelity. You have dedicated space infrastructure or telecom infrastructure like EchoStar is in there. Google is in there. Bank of America is in there. Given the amount of fundraising that's happened and how long SpaceX has been public, there's been a very there's been a very long tail of people who've wanted to get into this, and that's going to raise real questions over how they go get out of it. Typically, an IPO doesn't allow much in the way of individual investors to sell their shares. Given how long some of these people have been locked up, there may be more of a push to do that sooner than the typical 12-month lockup period.
It is going to be one for the record books. Bloomberg's Kyle Porter, we so appreciate your reporting on it. Look, let's go to a publicly traded name already that has some big moves today. We're watching ARM. That's after the company announced plans to sell its own chips for the first time, not just design them, not just license the technology. ARM CEO Rene Haas sat down with Bloomberg Tech Europe's Tom McKenzie.
It is a very big day for ARM. There's no doubt about that. We've been an IP provider since we've started. We started selling compute subsystems a few years ago, which was sort of the next step, but it's not a physical thing. But as we grew into the CSS business, we had customers that kept asking for more and more and more. And here we are today with ARM's first chip product, the ARM AGI CPU, which Meta is our lead partner for, and Meta asked us to do it with them. So we did.
Talk to me about Meta and the partnership then. One of your customers, OpenAI, also a customer. What are the commitments from Meta, from OpenAI to take this chip on board? When do you start shipping?
So as Mohammed said, it's available now, and we'll start shipping at the end of this year. We're not saying anything publicly about the volumes associated with it, but they are material enough that we have to start talking about the product because it's going to start showing up on our revenue this year.
The revenue starts showing up this year, and in your presentation earlier here in San Francisco, you talked about potentially just this one revenue stream, just this one part of the business, potentially $100 billion by 2030. Talk us through how you get to that $100 billion.
So we're looking here then, Tom, at the general purpose CPU TAM, which today in 2026 is about $60 billion, $70 billion, depending on your maths. I talked about agentic AI driving a 4x CPU workload even today. So $60 billion going to $100 billion by the end of the decade in terms of market opportunity is not really that much of a stretch.
CEO Rene Haas there speaking with Bloomberg's Tom McKenzie. Now, coming up on the program, a conversation with Congressman Suhas Subramanian of Virginia on the future of AI data centers. That's next. This is Bloomberg Tech.
Apple, well, it's set to unveil a new standalone Siri app featuring a redesigned interface and an Ask Siri capability that works across its software ecosystem. Now, that's according to sources. The app is expected to debut at this year's WWDC in June. For more, Bloomberg's Apple and consumer tech editor, it's Mark Gurman, joins us with the breaking news that you brought. And I think for many, it will be a finally feeling if this happens.
Finally, indeed, Apple is revamping Siri for iOS 27, macOS 27, and iPadOS 27, launching in September. This is going to be quite significant. This is going to include a Siri app. It's going to include many of the features that originally were supposed to launch last year. Personal context, so being able to tap into your personal data on your screen to fulfill queries. The idea is to transform Siri from just a voice assistant to an AI agent that you can use sort of like a co-pilot throughout your day to help you get things done and to solve queries. So this is a really big deal for Apple, and the hope internally and the belief internally is they'll be able to pull it off in time for the iPhone 18 Pro.
The other story that you broke is Amazon has been pretty active in M&A on the field of robotics. What do we need to know?
Amazon is acquiring a company called Fauna Robotics, which makes this adorable, I should say, humanoid robot. It's about 3.5 feet tall. It could dance, it could hold hands, it could respond to being called out by name, it could pick things up, it could take things from the kitchen and bring it to you. This is a big deal. And what's really clear here from what I'm hearing is that this is not meant for deliveries or for manufacturing or anything within their fulfillment centers or operations. The idea here is to learn about humanoid robots and to get the technology and the right people to potentially build a consumer-grade humanoid robot. So they'd be obviously going to toe-to-toe here with companies like Tesla, Boston Dynamics, Figure, you name it.
Right. Mark it down. 11:12 Eastern on March 25th. Bloomberg's Mark Gurman used the word adorable. Thank you very much. Now, here in Washington, the Trump administration says it's working to cut red tape around AI and the build-out of critical infrastructure. But that push is facing fresh resistance on Capitol Hill. Senator Bernie Sanders and Congresswoman Alexandria Ocasio-Cortez are set to introduce legislation that would impose a moratorium on new AI data centers until stronger safeguards are in place. That debate is especially relevant in Virginia, home to one of the largest concentrations of data centers in this country. Joining us now is Representative Suhas Subramanian, Democrat from Virginia. Your reaction, I suppose, to that initiative, and we can then talk about the scale of footprint of data centers in your state.
Yeah, it's important to understand where it's coming from. I don't support a full data center moratorium at all, but I do think there's a lot of frustration in communities like mine when it comes to data centers steamrolling communities, right, and having siting issues where they create power problems in those communities. And so if we did a comprehensive look at where we should be siting data centers across the country, what would be best for industry, what would be best for the communities, I think you would actually allay a lot of the concerns that people who are supporting data center moratoriums have about these data centers.
You represent a region that you cannot understate the footprint there. 70% of the world's internet traffic flowing through servers inside what are essentially tin cans.
If my district were a country, it would be one of the top 5 countries in terms of number of data centers and the amount of internet running through it.
What, therefore, is your position and how you represent your constituents? Because there is a split, right? NIMBY is one pocket. There is job creation. There is economic value created from the build-out that we're seeing.
Well, the data centers don't create a lot of jobs, but the local government likes it because they create a lot of revenue for local government and state government. They also don't create a lot of jobs, which means less traffic through those communities, less schools you have to build, less roads you have to build. So the local government loves it, which is why they keep approving them. But it's short-sighted because then you start to create energy problems. You start to have to build energy infrastructure through communities that weren't expecting it, didn't sign up for it. You lower home values. values, and people get angry about it, and rightfully so. It's more than just NIMBYism. I think people have legitimate concerns, but we can do this as a country. We can build out the data centers we need to build out in this country. We don't need to do a moratorium, but we have to do it with the buy-in of communities across the country. Because I know there's communities that want data centers that are coming to ours right now. If we had, all our data centers, it takes up more power than the city of D.C., and we're doubling the number of data centers. So we have too many in one spot. That's a national security concern as well. What we really need to do is just start spreading out the data centers across the country and getting it in places where community buy-in is there.
How can we hear from communities simultaneously? Clearly, we're hearing from leadership of big tech. Look, today, yet another technology council. The president is creating one at the moment where we understand Jensen Huang's going to be part of it, Mark Zuckerberg's going to be part of it, Larry Ellison, people very committed to data center build-out, to compute build-out. So how do you ensure that at the same time the voices of constituents are heard about these anxieties, about jobs, about what's happening in terms of energy prices?
We need to give them a voice in Congress, at the state level, at the local level. Every level of government needs to give their constituents a voice. And we don't have to be adversarial all the time to tech. We can work together and we can solve this together. But certainly we have to make sure the constituents' voices do have a say, do have a seat in the table, because otherwise there's going to be a huge backlash towards data centers. You're starting to see it more prominently now, right? Now you've got members of Congress introducing these moratoriums. You're going to see it even more prominently if they continue to steamroll these communities.
We had the Nscale CEO on to start this week, which already feels a very long time ago. It was on Monday, talking about how they're thinking vertical integration and they're bringing electricity and infrastructure to the bear. We had Crusoe, the CEO, on earlier yesterday, talking about how they're also thinking about infrastructure and building it out. Are there innovative ways in which you can still have data centers being built near you without suddenly a price push, without a national security risk, without any detriment to your property prices?
Yes and no. I'd like to see exactly what they mean by that, because a lot of times people talk about SMRs, small modular nuclear reactors. Essentially, you need 3 or 4 of them for each data center. And who wants those nuclear reactors next to their homes, for instance?
Right, and Scale's using gas provisions via Caterpillar.
Well, I
don't know how innovative that is.
What it comes down to, Congressman, on the industry side, they would argue they take on the capital burden of grid modernization. They buy electricity in bulk, and that they would argue there's a deflationary impact for everyday people's energy prices. There's also a lot of Bloomberg reporting and investigation that shows in zip codes where there's a high concentration of data center, electricity prices have gone up and energy prices have gone up. What do you see, the real on-the-ground view?
Yeah, my home in Ashburn, Virginia, our electricity prices have gone up. And it's because we had to pay for that infrastructure. They're not taking that cost into account. So, yes, you bring more energy infrastructure, it'll, on long-term, lower costs. But when we have to pay up front for that energy infrastructure, it raises our utility prices. So that needs to change. We need to make sure that communities aren't subsidizing the data centers' energies. And again, we can do this. A lot of companies are actually volunteering to do this, to be able to pay for their own energy infrastructure. I like that idea. That's going to help a lot. And that's the type of thing we need to be doing when it comes to getting community buy-in.
What is your view of your constituents and the American people's relationship with AI? I think Caroline and I have had a lot of conversations in the last 24 hours where AI doesn't have very much good PR at the moment with everyday Americans. One thing that Shom Sankar, he's the CTO at Palantir, put to us is that there's a distinction between what is AI slop, what people see in their social media feeds, and how they actually might benefit from it in their working and at-home lives.
I worked at the White House as a tech advisor. 10 years ago, AI was exciting to people. They couldn't wait to use it. They couldn't wait to adopt it. But they've seen the job displacement. It's hard to love AI when companies are putting out announcements saying, because of AI, we're laying off jobs. Congratulations to us, right? People don't like to hear that. They don't like to hear about data centers coming to the community and making them pay for the energy costs and energy infrastructure. So AI has a PR problem, but they've earned it because of the way they've talked to communities about AI. And so what we need to do is work collaboratively with government. I think Congress needs to get more involved than it has already when it comes to safety, national security, and communities.
Representative Suhas Subramaniam, Democrat of Virginia. It's been wonderful to have time with you today. Thank you very much indeed. Now coming up, Stryker still reeling from a March 11th Iran-linked cyber attack that stalled global operations. We'll discuss the cyber landscape amid the continuing war in Iran. That's next. This is Bloomberg Tech. Stryker, well, it says a March 11th cyber attack that stalled global operations is likely contained. But disruptions persist more than 10 days after the event. Look, that's according to the 8K filing from the company just yesterday. Bloomberg cyber editor Jeff Stone joins us with more. What is keeping it so long from being able to really ascertain operations again?
This is a really complicated, intense, complex attack carried out, by a nation state against a company that just wasn't expecting this kind of thing. You know, these hackers exploited an old vulnerability to get in. They somehow had access to, pretty deep confines within the corporate systems, and then they wiped data from their kind of perch in there. So it just takes a lot of investigation. It takes a lot of cleanup.
You know, we started this segment talking about how, 10 days after the initial attack, this is still causing an issue. We've also talked a lot on the show this past week with experts in industry about the sophistication and competence of Iran's cyber threat, right? Where does this rank, Jeff, in sort of historic attacks at the nation state level against the United States of America?
This is not the kind of threat that national security officials have warned about from the likes of a Russia or China. Iran is a little more specialized. They're a little more opportunistic. What they do is they try to inflict pain and project power in any way they can. So they saw an opportunity here to go against the U.S. healthcare sector, right, and cause some economic pain for this company. They've disrupted some surgeries. We know that some facilities around the country have pushed back procedures as a result of this. It is not the level of a big kind of blackout or electrical failure like you see in the movies.
Jeff, we are seeing hopes, maybe dashed for many, but hopes that maybe there's a de-escalation in the current conflict with Iran. But are you feeling that the ongoing conflict from a cyber perspective is still happening? What are companies currently being affected by briefly?
We know that companies have to have their defenses up against things like phishing attacks. I don't expect that to subside. U.S. national security officials, European officials have said don't rest on this, because this is a reliable means for Iran to try to even the playing field.
Bloomberg's Jeff Stone with the reporting. Thank you very much. Now, coming up on the show, we speak with Rachel Hoff, Policy Director at the Ronald Reagan Institute, on key takeaways from the Hill and Valley Forum, where we were yesterday, but also the growing prominence of the defense tech sector and its relationship with the administration and government here in Washington, D.C. It is halftime in the program. This is Bloomberg Tech. Welcome back to Bloomberg Tech. This is what financial markets look like. Technology stocks in particular pushing higher, oil coming down a little bit. The market is weighing up the prospects of a ceasefire, of a plan towards peace in the context of the war in Iran. America has put out some proposals. What we've seen throughout the morning is lines principally via Iran's state television pushing back, actually, on their interest in engaging with the US. But at least in the technology sector, we haven't seen the NASDAQ 100 or the Philadelphia Semiconductor Index change directory. You still see Brent crude, that's the global benchmark for oil, hold above $100 a barrel, and a lot of focus on supply chain, particularly the passage of ships through the Strait of Hormuz in the context of energy, but other things as well. That's what we've been talking about for 24 hours straight.
It is, because we've been talking about how technology intertwines with defense and how it all aligns here in Washington. We were at the Hill and Valley Forum, Ed, and it held a spotlight really on defense tech in the age of AI. But NSIB data shows just how early that shift still is. While Pentagon spending on defense tech has more than doubled from about $1.8 billion in fiscal year 2023 to $4.3 billion for fiscal year 2025, it still makes up, get this, less than 1% of total contract dollars. Here to discuss more on this is Rachel Hoff, Policy Director at the Ronald Reagan Institute, which issued the report. And its stark warnings, basically, you not only highlight how little in the grand scheme of things money is going to defense tech for all the amount that we talk about it, but you also try and outline ways in which it could be adopted faster. First and foremost, why do we get so much excitement about defense tech? Why is the VC community pouring in money when the end client isn't putting money in as much?
Well, it's a great question, and I think you got to look at, not just the end client, but the threat environment, the world that you were just speaking about, in which that client is operating. And simply put, it's a dangerous world. It's getting more complex and complicated as we see tension on the rise, as we see conflicts erupting in different corners of the world. And that means that protecting American national security is good business and it's important business. And so we're seeing those private dollars flow, that private capital from the venture capital community. But those investors are going to need to see the public dollars line up in terms of Pentagon spending if it's going to continue and if they're going to continue to take that risk.
I mean, the reporting that Ed and team and will continue doing, Anduril now looking at a overall market cap of $61 billion, raising another $4 billion. And yet we're just talking that less than that is how much has been directed towards defense tech from the Pentagon. What are your policy prescriptives to get the government even more comfortable with aligning that money?
There's a lot of work that we've done at the Reagan Institute with regard to this national security innovation-based kind of thinking about how public investments, but public policy can help tackle this problem that we're seeing the private sector stand up to solve. Right now, they're operating at two different speeds, where the private sector's in the lead. We're really seeing innovation, we're seeing progress, and the government is struggling to keep up. It's improving. You mentioned at the top, defense tech spending has doubled. That's great. And yet it's still less than 1%. And so I think continuing to improve the demand signal that government, and that's not just the Pentagon, that's also Congress, political leaders at the White House level and beyond are sending to private sector partners the clarity with which they're communicating their policy priorities, their technology priorities, and then the spending to back up those acquisition pathways.
I want to define what that spending is. What we've looked at on the show historically, Rachel, is unclassified or declassified missile spending. And to hammer home the point, largely it goes to Lockheed Martin and others of that legacy prime ilk. The question, I suppose, at this juncture is, does what's happened with the war in Iran change that? You know, we've done a lot of covering the use of drones, lower cost, autonomous technology. The question for your report is the trajectory different now?
It's becoming different. It is changing. I think like what we're seeing with the conflict in Iran and Operation Epic Fury is really driving home the point that defense tech matters, that these low-cost systems are going to be an important part of ensuring America's national security. But the fact remains that most of the platforms, the weapon systems and platforms that we've used in Operation Epic Fury are from the Reagan administration or before, 40, 60, 80-year-old systems. And those are important platforms, right? Aircraft carriers moving into the region are an important part of projecting American strength. But the fact that only one weapon system, the Lucas drone, is being used in Operation Epic Fury that's been developed in the last 15 years, only one system in this operation that's less than 15 years old, really shows how we need to keep up to meet those challenges that you're speaking to.
The word procurement comes up quite a lot when you're at somewhere like Hill and Valley Forum, and there's a bit of an exasperation from industry about how that works. PowerPoint presentations is something that they stress over. Is this administration better than prior administrations, and this Pentagon better than prior iterations of it at dealing with more nimble, smaller technology companies?
Well, politics aside, at the Reagan Institute, we've developed a report card to look at exactly this, and we've seen improvements in some grades that matter in this defense innovation ecosystem over time, and we've seen some grades moving in the other direction. But the biggest year-on-year jump that we've ever seen, biggest improvement in grade, is something we call customer clarity, that demand signal that the government's signaling to private sector partners. And we see that not just through spending and acquisition pathways, but some of the reforms that this administration has pursued, the acquisition transformation strategy, streamlining technology priorities. They've said a fewer number of technologies are important, and then sent that signal to private sector partners in terms of what the administration wants to focus on. And from what we hear from those private sector partners, that's helping them align to national security priorities.
I want to talk about talent for a minute, because Chris Power-Hadrian joined us yesterday from the Hill and Valley Forum, and his point was talent is a real issue. And that's why, in many ways, they've got this novel way of training people up, because there's a huge retirement block that's about to come.
You said the average age of work in that industry was 65.
Yeah.
Or something like that.
And not everyone works until the president's
age. It's a generational thing in the school. Sorry, Carrie.
No, but what's so great about your national security, basically an innovation-based report card, is it reads like a school report. And you're saying talent base, D+ in America. What do we need more? Look, I sit as a British person who, luckily enough, works in America.
Also a British person working in America, but
do we need more immigration? What is it that's needed to boost the D+?
It's all of the above. We need to attract foreign-born talent here to the United States to work on some of our hardest problems with appropriate controls, of course, in place for national security. But we also have to be channeling our domestic talent toward STEM careers, toward not just high skill, but also skilled trades. Companies like Hadrian are doing some very interesting and innovative things in that regard. And also thinking about how technology itself, AI and beyond, can make our workforce more productive even in smaller numbers, that it's not just about maintaining the workforce of the past, but preparing for the workforce of the future. And our low grade, I think, in the talent and workforce domain shows that there's a lot to be done, both with private sector and public sector collaboration here to really get at that challenge.
Rachel Hoff, Ronald Reagan Institute. It's great to have you on Bloomberg Tech. Thank you very much. Now, coming up, 54-year-old VC firm Kleiner Perkins makes its largest raise ever. $3.5 billion. We'll discuss next with partner Ilya Fushman. This is Bloomberg Tech.
Kleiner Perkins, the half-century-old venture capital institution, has raised $3.5 billion to make bets on AI startups and current portfolio stars innovating across autonomy, transportation, professional services, and space, for example. Kleiner Perkins' partner, Ilya Fushman, I'm pleased to say, joins us for more. And look, you've got $1 billion dedicated to what is your 22nd early stage fund. You then got $2.5 billion going in the growth areas. Just tell us about what excites you. Why this amount of money? Why now?
Well, we're really at the early innings of probably the biggest transformation in technology that any of us have witnessed. We see companies growing at big scale faster than ever before. We see AI penetrate all facets of our lives, whether it's on the consumer side with search, media. We have video models that are still on the come. And then on the work side, we see companies fully transform how they operate, whether it's across legal and professional services with Harvey, healthcare with Open Evidence, transportation and autonomy with Waymo. And we're still very much in the early innings of all of this. If we look at how some of the leading AI-forward companies operate, and we compare that to the more traditional companies, the opportunity to penetrate the enterprise with AI is just infinite from where we sit, and that's reflected in the funds.
Where excites you the most? Is it putting the money into fresh new startups that haven't even been designed now? Or is it backing, say, a star performer? Anthropic, we know, is looking to be IPOing. You've got standout names like SpaceX on the books as well. But where are you thinking about where you can follow on your capital?
So our model is pretty simple. We try to back companies as early as possible out of our venture funds. And as they hit inflection, as they hit escape velocity, to really concentrate and double down with our growth funds. Sometimes we see things a little bit later, and so we come in with a very high conviction, big check out of our growth funds straight away. But the really exciting thing we're seeing in the market today is that as companies hit really large scale, like in the case of Anthropic, that we've really never seen before, the opportunity to back these as they progress to escape velocity is near infinite. And so that really is reflected in the fund structure. So the venture fund, we're looking for application layer companies. We're looking for infrastructure companies. We're looking for autonomy. And as models become cheaper and more performant, the physical economy becomes an opportunity. But as these companies then hit scale, hit growth, we really concentrate with our growth funds.
Ilya, we see extremes at both ends of the spectrum. Wrote a few weeks ago about the seed round now being more like the coconut round, the avocado seed round, where you are putting huge checks into a collective of a few individuals, and you're basically betting on their intellectual power. What are you seeing in that early stage? I'm really interested. You've dedicated those funds to that part of the market.
Well, what we're really seeing is just the opportunity, again, to transform industries with AI business models is, again, near infinite. I mean, everything is really up for grabs. We're kind of past what I would call the hype buying part of the cycle, where folks just wanted AI. And we've seen companies like Harvey, for example, in market with customers with data around engagement and growth and performance to inform how we should think about these opportunities at the early stage. There is a novel case of structure of companies where you have sort of the formation of next generation labs, which could be the next inflection in AI itself. And those are very interesting. But then you have really runaway successes that are helping people do their work better, that are helping consumers get answers around healthcare. And so we try to balance our investing across all of those because there is another frontier to be unlocked here. And those are the model companies of the future. But then you have the model companies of today, like Anthropic, which are growing faster at a scale that's never been seen before. And I think that's still early in their trajectory.
At the other end of the spectrum, Bloomberg also reporting today that SpaceX could seek to raise $75 billion in an IPO, confidential filing this week, targeting June. The valuation, $1.75 trillion to $2 trillion. Kleiner Perkins has participated in some prior SpaceX rounds. What's going to happen? How is that going to impact the world? Space is a domain that you want to go after in the new funds that you've raised.
I think we want to go after many domains. Space is a really good example of bringing communication to the world, and that's incredible connectivity that lifts everything if you think about technology, right? The internet was the big unlock, and getting more of connectivity throughout the world is important. But it's also a testament to the fact that you now can build companies that are truly transformational when it comes to both the physical world and the digital world. And that's something that we will focus on quite a bit, and that's autonomy. That's autonomy maybe in the defense tech sector. That's also autonomy on the consumer side. We have a position in Waymo as well. And so we just see a really, really large scale opportunity across everything.
Ilya, according to people familiar, I'm told that you managed to raise this amount of money pretty fast and it was oversubscribed. And I imagine LPs were excited because of the opportunity and the delivery of liquidity, unlike a lot of other funds, like you've delivered when it comes to the Figma IPO. We saw the Windsurf acquisition. We might see enormous returns if SpaceX and indeed Anthropic and maybe even a Databricks or a Waymo do go public. Is that what locked in the LP base? How do you think about the need for the markets to open in 2026?
We're very fortunate to have an incredibly supportive LP base, and we're very thankful for that. And ultimately, it's all a testament to the entrepreneurs that we back because they're the ones building these incredible companies. But if you look at the public markets and if you look at what's really driving value, it's technology companies. And if you look at the private markets, you know, there's a public market Mag 7, and there's probably a future private market Mag 7 that's on the come. And that's really the interest that we're seeing from limited partners because these companies are getting to, again, revenue scales that we've never seen before faster and compounding at those scales faster than ever before. And there's probably a next level of the future Mag 7. And these could be the application companies like a Harvey, like an Open Evidence, which are then going to be the next generation. It's really just a testament to the fact that tech is driving pretty much most of the value you see today. LPs recognize that, we recognize that, and we think that's the really big opportunity here.
Ilya, we've talked about this, but public market sentiment might be at an all-time high for tech. Public sentiment is not, certainly when it comes to AI. They're fearful, they're worried about jobs, they're worried about energy prices. And from your portfolio companies, are you trying to get across that the opportunity here? You talk about the infinite possibilities, but for many listening at home, it feels like infinite worries and concerns.
Well, I think one byproduct, which will be pretty straightforward, is quality of life will improve for everyone, right? We will have better access to information, better access to healthcare, better access to services, better, more performant world around us, really. If you think about Waymo, the ability to have very safe transportation on demand is incredible. On the flip side, there is a very clear worry because these changes are happening on a time scale that's faster than ever before. And one of the things we do think about quite a bit is how do we help folks upskill? How do we help folks learn and transition into this world? It's going to be a world of abundance, but what we have to be thoughtful of, as I think the industry, is making sure that the abundance is accessible and distributed.
Kleiner Perkins partner Ilya Fushman, great to have you on Bloomberg Tech. Thank you very much. Now, coming up on the program, OpenAI nears an $850 billion valuation, as it is also close on a deal to raise $10 billion more in its latest funding round. We have the details next. This is Bloomberg Tech. OpenAI is nearing a deal to raise about $10 billion from venture investors, including Andreessen Horowitz, Abu Dhabi's MGX, and Microsoft. That's according to sources. That would bring its total haul from its latest funding round to $120 billion, boosting its valuation to $850 billion. Bloomberg's Shireen Ghaffari is with us, part of the team that broke the story. Okay, so let's just be very clear about what this is. It's basically an extension or expansion of the round they were already doing. So they did $110 billion from corporates, basically, and now they're adding a little bit more, but it's the VCs that are getting in. What else do we need to know?
That's right. So this is sort of the second part of the round. We're heading into the final close, as soon as end of month, which could be next week. And we're seeing some, big names, traditional VCs, as well as other funds like D.E. Shaw, Coatue, and we are seeing one more company investor jump in on this part of the round, which is Microsoft.
And that maybe raised a few eyebrows, Shireen, because there's been much questioning of that relationship. What does their participation look like? What does it signal?
Yeah, I think there's been a lot written about OpenAI and Microsoft's ups and downs. Of course, Microsoft being the biggest sort of early corporate backer of OpenAI, critical to their expansion into this GPT era. However, in recent times, we've seen OpenAI diversify its cloud, its compute base, diversify its corporate partner base. And so I think this signifies that Microsoft's still in OpenAI. Now, how much and how deep, and are they the kind of sole corporate partner as in early days? No, but we are seeing a continuation, at least on the funding side here.
Shireen, another big headline on OpenAI is it's discontinuing support for Sora and winding down a deal that it had with Disney. I remember when that deal hit, we broke it on this show and made a pretty big deal of it, pardon the expression. Why are they winding down Sora, and why did Disney and that relationship fall apart?
That's right. It was sort of an abrupt ending. So if you remember, Sora launched an app not so long ago, and it sort of had a viral beginning and was topping charts. But as viral apps do sometimes, kind of user activity on that app seemed to die down in recent months. And remember that producing videos, especially AI videos, it's an expensive business. It can cost a lot more to produce even a 10-second video clip than it does a paragraph of text in a chatbot. So you have to think about the cost-benefit ratio for a company like OpenAI when it's facing stiff competition from Anthropic on enterprise, when it's facing stronger Google Gemini models. Is it the right decision to go all in on video when there's limited compute, limited resources? I think is probably the question the company was thinking. Now, the dynamics with Disney, I think there's going to probably be more about this story. We're going to look into exactly what happened there more, but I think that we're seeing this pushback on video front from a major lab is very significant.
And it really does seem part of this broader strategy shift, honing in on where to win, that Fujisimo is really bringing over OpenAI as well. Bloomberg's Shireen Ghaffari, great reporting as always. Thanks so much for bringing it to us. And look, we've got to talk a little bit more, Ed, about what all this means for Disney. Because what a first week for Josh D'Amaro at the moment. Like the unraveling of the Sora deal that many people had thought would be the next experience we were going to get with Disney Plus and the like. And now also there's issues with Epic Games. So Josh D'Amaro became CEO last Wednesday, the 18th, at the annual shareholder meeting. He's 7 days in. Oof. And Disney had put money into this OpenAI relationship. It was supposed to yield things. They also have an investment in Epic Games, video game maker, a company that's doing big layoffs. So hard start to that tenure. Welcome to the role of CEO, it would feel like. Well, that does it for this extraordinary edition of Bloomberg Tech right here from the heart of Washington. Yeah, lots to recap on tech and politics. Do it on the podcast. You know where to find it. Online, Apple, Spotify, and iHeart. From Washington, D.C., this is Bloomberg Tech.